A generation of college graduates has been hobbled by a heavy debt burden. I'm Winnie O'Kelly, reporting for Business Day Live. Michael de la Merced is joining me to discuss a board shakeup at Yahoo. And Andy Martin is here to talk about student loans. But first, 3 top executives at JPMorgan Chase are on their way out after last week's $2 billion trading loss. I'm joined by Jessica Silver-Greenberg for an update on that. Good morning, Jessica.
Good morning.
So it's quite an astounding move. Just in a few days, we've seen some top management turnover at JP. Tell us about it.
Well, it's very fast. Everyone's saying that this is one of the fastest kind of scrambles and staff reversals that we've seen in a long time. So what we've had is 3 top executives, or 1 top executive, 2 top traders, resigning at the Chief Investment Office, which is the office in London that was responsible or oversaw the trade.
And can we expect more there? Do we feel like this is it, or is the turbulence going to continue?
I think the turbulence is likely to continue because the trade was, and the responsibility for the trade was not restricted to these 3. There are others under scrutiny as well.
You know, it was said in your story today that Ina Drew, who was very close to Jamie Dimon, had offered her resignation much earlier, and he'd held on to it. So what made him, you think, tip and say, okay, now is the time?
I think that Jamie Dimon is under an incredible amount of pressure. What a lot of people inside the bank said was that the timing of this loss is very bad for the bank because it comes exactly when they're kind of wrangling over what banks are allowed to do with their own money, the bets that they're allowed to make, because we're in a really tense regulatory time. And so this plays, and Jamie said this himself, this plays into the hands of anyone who is pushing for greater regulation of banks.
So that's the question now, right, is how will Washington respond, and what will JPMorgan Chase do to try to keep from having even harsher rules put on its operations?
Exactly. A lot of people were saying, what I found interesting is that not only Jamie Dimon, but other banking industry, all of the banking industry will marshal resources to go down to Washington to say this is first of all falls within the purview of what we think is appropriate for banks. We need to be able to do something with the excess deposits that we make or that we have. And so I think we're going to see a lot of movement in Washington by banks trying to convince regulators that they shouldn't tighten the rules.
It seems one of the things they're going to have to try to demonstrate here at Chase is that this was a mistake, that they weren't trying to take some big speculative position. You know, in order to do that, will they have to reveal more about what actually went on? What are they trying to do with those trades in that huge book right now?
So they're trying to unwind it. They're trying to kind of move out of that position, but it's difficult because the timing has to be such that you don't suffer even greater losses. I mean, we don't want to see that $2 billion number go even higher. But yes, I think right now they're trying to get their heads around both what happened and how to explain it to regulators and their shareholders. Right,
and that's the big one, right? Tomorrow there's a shareholders meeting in Tampa, of all places?
Yes, Tampa, exactly, for a New York-based bank. Some people say that it's an effort to kind of keep people away. It's a destination wedding kind of thing.
Right. But what will the mood be like? You know, what's likely to happen there?
I think shareholders are going to be very unhappy. I mean, I think this crystallizes their unhappiness. Now, they've been getting pretty healthy dividend payments, which is unlike shareholders at other banks, but I think they're just upset and they need to be placated that this wasn't a risky bet.
Oh, it'll be interesting. Thanks so much for joining us today.
Thank you.
We're turning now to another executive, ouster. Scott Thompson, the chief executive of Yahoo, is on his way out after allegations of resume padding. That's part of a bigger fight over the strategy for the flailing company. Joining me now from our newsroom is Michael de la Merced. Good morning, Michael.
Morning, Winnie.
So this has been quite a soap opera, to be honest. Thompson was hired by Yahoo, and it was revealed that he didn't have the same degree that he was said to have had, and now he's gone in just very short order. What is the board likely to do now?
Well, at this point, the board's picked an interim CEO. His name is Ross Levinson, and he's been with the company for a little under 2 years. So at this point, they've pretty much reshaped the board. They've brought in a new interim CEO. They've named a new chairman. And the big challenge for them now is how to fix Yahoo, which has been in trouble for years at this point.
And there has been a restive shareholder, Third Point and Dan Loeb, and this was sort of what they wanted, right? So what are they pressing for?
Well, at this point, this is a huge victory for Dan Loeb. He was the one who actually uncovered Scott Thompson's error in his academic record. And he has now gotten 3 seats on the board. It's himself, a media executive, and a turnaround specialist. And at this point, we think that what he wants to do is push Yahoo to continue trying to build out media and advertising, its traditional core strengths.
And what was it we thought that others were trying to do with the company? You know, what would be the alternative approach?
Well, Scott Thompson, it's kind of hard to say what he was articulating. He came over from PayPal. He didn't have a traditional background in media and advertising. At one point, people thought he was going to try to push Yahoo into online payments, which struck some people as a little odd.
So going forward, we think more advertising, that's going to be their general focus, and I guess the interim might be the permanent CEO?
He's definitely angling for the position. He has been in there. There have been talk about him taking over for some time. And he's likely to push Yahoo into more social networking and more mobile. That's where a lot of advertising is.
That's great. Thanks so much for joining us today, Michael.
Thanks, Winnie.
Finally, there are more than $1 trillion in outstanding student loans in the United States. About 94% of students who get bachelor's degrees are borrowing to pay for their education. That's having a dramatic effect on the prospect for indebted graduates. Andrew Martin is here to talk about it.
Morning.
Good morning. Quite a story this weekend about the incredible amounts of debt that students are racking up, sometimes unknowingly, shall we say. I was really struck by some of the comments we got. One came from Pam in Indiana who said, she really liked this idea of having a financial literacy test prior to receiving a loan. That would be a good reality check.
You know, there was a lot of comments like that about how can these students be so stupid and take out, you know, not say they don't know that they're going to end up with $100,000 in debt. And then there's some truth to that. There's no question. Just like in the mortgage crisis, you know, when people got in over their heads with houses. But the fact is that the student loan, the financial aid process is very confusing. There's not a lot of counseling. You have to remember, a lot of these people are making decisions when they're 18 years old, 17 years old, about you know, how they're going to pay for college, and everyone thinks they're going to graduate in 4 years, right?
Right.
And sometimes it doesn't work out that way.
And that the economy might be going pretty well by then.
Absolutely, and you know what? But she's right. I mean, they're clearly these students could benefit from more information, from more literacy, financial literacy about, you know, not only how much do they need to borrow, but what's it going to mean when they graduate? What's their monthly payments going to look like when they get out?
I think the comments fell into 2 sort of broad categories. One was sort of, you know, what are you doing, students? Nick from London wrote, instead of talking about the ridiculous cost of tuition in the States or the painfully lacking structure of financial aid, most people are assaulting the temerity of a young person wanting to go to a better university. You know, what do you think about that? Should we all have a chance?
It's true to some extent that, you know, you would hope that when you're 17 or 18 years old, you're full of hopes and dreams and you want to aspire to do something great.
Right.
I mean, and, you know, the current system encourages them to do so. Everyone, you know, look, my kids, your kids are told to get into the best university they can, to aspire to go to the greatest university. And the fact is, you know, the best university might not be the best choice. The cost has not been as much a part of that equation as it should be. There's no doubt.
And you talk sort of about the different categories of schools, because there's the for-profit schools on the one hand, and they're quite different than the others. But then you have state schools and very expensive sort of private schools. You know, how does it sort of fall into place? Is there a good and a bad and an ugly?
You can't generalize about any of those sectors. For instance, the private four-year institutions covers a huge gamut of types of schools. I mean, you got Harvard and Princeton, then you have small liberal arts schools out in places like Ohio, where I went. And the fact is, Harvard and Princeton have such huge endowments that generally they're able to offer very generous financial aid to people who don't have means. So kids can come out with relatively small amounts of debt. Where a lot of other schools, you get students who don't have as much money going there, they need more financial aid. And you know, in the case of the girl who was in the lead of my story today, or yesterday, who went to Ohio Northern University, she got a very generous package from Ohio Northern, but even if you get half of it covered by the university, she still had to borrow $25,000 a year, or $20,000 a year.
Right.
And if you add it up over 4 or 5 years, you know, you're looking at $120,000. So
you know, that's the weird thing. Another comment that I really liked came from Joseph Kay of Fort Myers, Florida. He said, you don't have to go into this kind of debt for a college education. You can live in an off-campus apartment, go to a state school, get a part-time job, So there's a whole group of people who think that, you know, hey, students are just not being smart, not that they're being hoodwinked.
There is some truth to that. I mean, you know, the reality is you could go to a community college for 2 years and live at home with your parents and save money. It's still a good deal. And then transfer to the state university or a better school to finish. But, you know, I think in certain communities at least, there's very much encouragement to go to what one of these critics calls sleepaway university and get that whole college experience. I mean, you miss the sort of college experience if you go to community college. And the reality is there are some very good community colleges, but there are some very bad community colleges. And the rate of transfer and success of people who go to community college and complete their bachelor's degree is not what it should be. No. So you run the risk of going to community college and life intervening and not finishing.
You know, your story captured what has been going on sort of sub rosa, just kind of quietly for a long time, which is the lack of funding or the decline in funding for public education. You know, what's really happened at the state levels?
Well, you know, look, the states are constrained by all sorts of mandatory costs. Medicare, they've spent a lot of money on prisons over the last 20 years, primary education. And as one of the academics in my story noted, you know, universities are one of the few state programs that can raise money on their own. Prisons can't, Medicare can't. So in some ways it's an easy thing for them to do, to say, you know what, we're going to cut higher education and put more money into Medicare. We have to in that case, or more money into prisons. People like it when we lock up the bad guys. And the universities can just raise their tuition. But the problem is now that's been going on for so many years, decades really, particularly in the last decade, that, you know, some people think the tuition has reached a tipping point where, you know, lower income and middle income kids who've always used these schools as a stepping stone can't afford to go there, or at least not without taking on huge amounts of debt.
Right. You know, it seems like people think it's just a recession-driven thing. It's tough times. It'll be better in a few years. But that's not really been the case, either in funding or for the outlook for students finding jobs, right?
That's right. I mean, certainly, look, the fact that these kids can't get jobs certainly plays into this, because you get out of college with $30,000 in debt, you can't find a job, you defer that, and interest rolls, so the balance grows. But, you know, one of the really underlying issues here is that college costs have increased faster than inflation.
Right.
They've increased faster than medical costs, and no one's really addressing that. You know, it is true that kids can't get jobs, but they have to pay more and more and more to get this education.
You know, one of the things that surprised me the most was how big student debt has become, bigger than credit cards, bigger than consumer debt, outside of mortgages, of course. And I know you went into this knowing that college debt had become a big thing, but what did surprise you the most, perhaps, in all this reporting?
Without question, how easy it is to go onto a college campus and find a kid who has $70, $80, $100,000 in debt. I mean, all you got to do is walk around and start talking to people. And, you know, the reality is, look, a lot of kids take debt. A lot of them take reasonable amounts of debt that they can pay off, most, in fact. But this group of kids that are taking on huge amounts of debt, saddled with, you know, as I say, 70, 80, 6 figures of debt is growing. And that, you know, those people, unless you're an engineer or a pharmacist or something, you know, I don't know how those kids are going to pay it.
Yeah, it's sobering.
It's sobering.
Thanks so much, Andy.
Thank you.
That's all for today. Please stay with us online at nytimes.com for our continuing coverage of this and other stories. I'm Winnie O'Kelly, reporting for Business Day Live. Thanks for watching.